Hi, Lenore here, and I'm going to talk to you about exercise 2-4 on page 85. But before we do, I'm going to explain what T accounts are. T accounts are a very visual way of seeing how accounts increase and decrease in order to balance them. So the bottom line, all our debits must equal our credits. So you'll notice that our debits are on our left-hand side and credits are on the right-hand side of all the T accounts. So that is one of the rules of accounting. In a T account, debits are always on the left-hand side. Now, assets, liabilities, stockholders' equity, revenues, expenses, and not dividends, but they're categories. And each category of assets has individual accounts. For example, assets are cash, accounts receivable, prepaid insurance, supplies, buildings, land, things like that. So assets, the category of assets, increase with a debit. And they decrease with a credit. That's true of assets. Now, liabilities will decrease with a debit and increase with a credit. Stockholders' equity, other than dividends, will also decrease with a debit and increase with a credit. Dividends, that's the oddball. Dividends are what we call contra equity, meaning that it moves in the opposite direction of equity. Contra from the Latin, opposed or opposite. Dividends will increase with a debit and decrease, if I could spell it, with a credit. So again, assets increase with a debit, dividends increase with a debit, liabilities and stockholders' equity increase with a credit. Revenues decrease with a debit and increase with a credit. So decrease with a debit, increase with a credit. And expenses increase with a debit and decrease with a credit. I know that's confusing. I like to use little arrows, but the thing to remember would be assets, dividends, expenses all increase with a debit. Liabilities, equity, and revenue all increases with a credit. Very important. The increase side is always the normal balance side. Okay? So with that, let's move over to our problem, or rather our exercise. I think you can see that pretty much. So I've already filled it in. It's asking us to indicate whether these accounts will increase or decrease with a debit or credit and what their normal balance is. So an asset will increase with a debit and decrease with a credit. Its normal balance is the increase side or the debit side. A liability will increase with a credit. That was already given that it decreases with a debit. The normal balance is a credit. Common stock is stockholders' equity, increases with a credit, therefore it decreases with a debit, only one debit actually. The normal balance would be a credit. Retained earnings, again, moves the same way. Increases with a credit, decreases with a debit. Its normal balance is a credit, the increase. Dividends, as I said, is contra, or moves in the opposite direction. So where common stock would increase with a credit, dividends increases with a debit. Whereas common stock, retained earnings decrease with a debit, dividends will decrease with a credit. Therefore, its normal balance is a debit balance. It's always the increase side. So now we have revenue and expenses. Revenue will increase with a credit and decrease with a debit. making its normal balance a credit, and expenses will increase with a debit, decrease with a credit, therefore its normal balance is a debit. Okay, so there you have it. How do these accounts increase and decrease, and what is their normal balance? With that said, Lenore out.